What's up, guys? So this is the 5th episode of Tutorial Tuesdays. We're going to be going over one of the most important things in trading. Now, you could be the best trader, you could know all the patterns, exactly when to buy and sell, but if you're not picking the right stocks each day, if you are a day trader, then you're not going to be able to succeed. So how do these gurus do it? How do they pick them? Stay tuned. We're going to go over the 3 things that a lot of day traders look for day in and day out to be able to capitalize on the market. Let's jump right in it. So now when using a scanner, you do want to use a few different filters, and these are going to be the 3 main things that I personally use when I'm looking to see what stocks I'm going to play at market open. Now, you don't want to be sitting there looking at a stock all day from 9:30 to 4, just literally waiting and waiting and waiting and waiting and waiting and waiting and waiting for it to make a move. Maybe it's not going to move that day. So you want to play some of these momentum stocks. So let's dive into how you can pick each individual one. Now, I use a site called Benzinga. They are a paid service, but there are a bunch of free versions out there like Finviz, etc. Now, the reason I like Benzinga is because it does update the prices in real time as well if you do click on the stocks. How I'm going to filter these stocks will depend on 3 things, really. Market cap, like we said, is always going to be at least 10 billion. Now, the reason for that, again, is you don't want to get caught in a low market cap stock, right? That is able to be subject to manipulation. You don't want to be in a penny stock that's going to pump and dump on you at any time. Now, I don't have anything against penny stocks, and a lot of traders are very good at trading them, but in the beginning, I don't recommend trading penny stocks just for the reason of getting stopped out left and right, and it can be frustrating in the beginning. So I use a high market cap of at least 10 billion or more. This will give us access to companies that are like Apple, Shopify, you can see here, Chegg, companies, Prudential. These are just some of the movers today. Square, right? So a lot of names that we all know and love. Now, another thing I do is I like to price them at least at $5. You can go down to, between 0 to infinity really, but I set it at 5 just because I like to have something that at least a 1% move will be at least a substantial amount. Sometimes I even go up to $10 or so, and you can see the list will change. Now, after that, you want to set your period at the session. So that means that you're looking at the pre-market and we're looking at the session. So we want to see the biggest movers, gainers or losers, right, in pre-market for the session. Now, just pulling that right away, we see that we have NEE here, right, down 74%. So now if we go to check that, most likely what is it going to be? It's going to be either something catastrophic happened to the company, or in that case, usually it's probably a split. And I believe there was a split on it, so I think I already know that. Yeah, there was a split on this stock. So that's obviously going to be an outlier. Didn't actually make any crazy moves, right? So that's not something that I would trade. Now, the next stock, though, is XLNX. Now, this stock actually was getting acquired by AMD. Now, is this a good stock to look at and to trade? Probably. So what do we look for to happen when we are playing some of these pre-market movers? We want to look for either a pre-market low break, which would be right here, right? Or we want to look for a pre-market high break. AMD had a weird deal with them, so there wasn't too much movement with XLNX. So again, this is something we'd probably cross off the list. But if we go to the next stock, Chegg, right? On Chegg, right here, we see that there was earnings yesterday, and we saw a huge dump after hours. Now, from the close, we saw a dump of about almost 7% to the lows on Chegg. So what we can expect is the next day a continuation of the sell-off, right? Or we can see a bounce from these lows. So we have to wait until pre-market to see that. So this is after hours here until 8 p.m. at night. And then we open back up, right? So we open back up and we can see pre-market right here. This was the pre-market high, okay? Now, where was our pre-market lows? Right around the same level that we closed at in the after hours the day before. So what can we expect? Well, we saw a pump back up to these pre-market lows right at the open. Now, this usually will happen if you tend to get a gap down, right? So we see that there was a dump down pre-market right before the open, right around this level at $80. But this is where price was holding for the most part in the after hour session and in the beginning of the pre-market session, right? So it wasn't until the market was about to open that we saw this level actually come into play. So really we had our pre-market lows at the bottom here, right? But we have 3 levels kind of drawn out here. And normally if you would see a dump like this, you're always going to have a retrace back to those levels, especially when the stock has earnings and it gets oversold. you're always going to see some type of relief bounce for the most part on a lot of these names, especially bigger names. So we saw Chegg push up, and this is where we could have taken a short, right? So we see that the price got rejected on the first 5-minute candle. Second one, we had a big pump up again, and then a rejection again. So we could have actually rode this down, and it broke through, right, our lows that we made right at the beginning of the day. And we could have continued to ride this down. Now, where would we have gotten stopped out? Probably somewhere around this range right here, right? Just given that there was some bullish price action, of course. But we would have already had decent profits on either a short with equity, or we would have had nice profits on puts here as well. So this is something that you always want to look for when you're playing some of these stocks. Basically, a pre-market low break, pre-market high break will always usually trend in the same direction that it breaks up or down. So how do you take advantage? Obviously, if you're playing pre-market low break, you want to buy puts or short the stock. And if you're playing a pre-market high break, then you're going to want to buy calls or buy shares, right? So let's take a look at something else. XAS. Let's see, this is a gap up, okay? So another prime example of something that continues with the trend, right? So here's our pre-market guys, right? In this yellow shade. Again, we'll draw our pre-market highs, which are at roughly 114, right? So we saw right at market open, it pushed right above 114. So what we could have done is look to see if we were going to continue trending up. Now, if you switch to the open candles, right, it actually gapped up immediately. We're on the 2-minute now. So you probably would have been a little hesitant, or you probably wouldn't have entered right away, but we did see a small little pullback and then a continuation upwards. So when we did see a break right above this trend line here, right, we could have entered some calls or bought some shares. And as we can see, stock continued up. Where's our stop? Below the next breakout level here, right? So when we got up here, we'd probably chop around here, either stop out here or get stopped right below it. Now, what can we do then? Enter again on a break above this level, right? And you can see this stock continued to trend throughout the rest of the day before taking a dump towards the end. Now, a lot of these pre-market movers, guys, you want to catch these movements within the first 15 to 30 minutes. Now, what you can do is take profits about 1/3 or 2/3 of your position when you hit your certain target or when you are happy with profits themselves. I would always leave a runner on a lot of these because they do tend to continue up after they do retrace either up or down, depending on if you are short or long. So you do want to maximize your profits on that last third of your position, especially if you're already pretty much going to break even by taking profit on the first and second trim, right? So guys, remember what we are looking for during our pre-market scan is these 3 things, right? Number 1, a huge move either to the upside or downside that is irregular for the stock. Usually it's going to be based on earnings, or maybe there's some type of catalyst like we went over before, right? Now, the second thing we want to do is make sure that we are playing some of these high market cap and large market cap stocks, right? We don't want to get caught in some of the penny stocks that are susceptible to manipulation, and we don't want to get into a position that's immediately going to reverse on us at any time easily. Now, number 3, we always want to wait for what? A pre-market break of the highs, right? To go long on calls or to buy shares, or we want to play a breakdown of the pre-market lows, right? That's where we will buy puts or enter shorts. Now, it's very easy to place your stops on these positions, right? As soon as they break either the lows or the highs, you can easily just raise your stop loss to break even, which would just be those previous highs or lows, especially after it has already passed them and it's trending either up or down, depending on which side of the position you're on, right? Utilizing all 3 of these tactics will help you guys find those stocks that are going to be the best to be played for day trading, right? Now, if you're swing trading, there are some other strategies, and we might go over them in the next couple episodes for you guys. But for day trading specifically, you're going to want to take advantage of the pre-market moves on stocks in order to gauge what you're going to be playing that day. As when the market opens, they do tend to run in either the same direction or have a sharp reversal. So again, the 3 things that we need to look for when we are scanning pre-market are what? Number 1, obviously a big move, either a gain or a loss in the pre-market session, right? Usually following up with a catalyst or some type of earnings that happened the day before, or that pre-market session itself. Now, 2, we need to find a stock with a high market cap, right? We don't want to get trapped in a penny stock or something that can be easily susceptible to manipulation, right? And number 3, we want to see a break of the pre-market highs or the pre-market lows, right? Either one of those. But that's it, guys. We hope you're able to take advantage of those 3 tools in order to check pre-market for those momentum plays, right? You don't want to be stuck in the market waiting and waiting and waiting and waiting for your stock to move, whether you're in it short or long, right? Now, these are day trading tactics. Of course, you don't want to use them swing trading, as one day might not affect the other, right? You want to play more patterns and candlestick price action on the daily chart. But if you are going in some of these quick scalps, this will be the best way you can succeed playing the market as a day trader. So let us know in the comments below, what strategies do you guys use for day trading? Is this helpful to you? Is it going to work? Let us know how it goes. And don't forget to like, comment, and subscribe. We'll see you guys next Tuesday.